Hello and welcome to another update video about Solana. On the Solana chart, we are dealing here with the same structure that I already explained to you in the last video. We have three scenarios, I think. The chart allows for three likely interpretations, but I think it's important to realize they're all bullish. Okay, so I think that's an important realization because it gives confidence into the larger trend. So as long as we don't even break below the support for the most the immediate bullish scenario, there's no need to change anything here. And I think it might be worth going from the most bullish to the, let's say, short-term most bearish, but still overall bullish scenario. I try to present it as simple as possible. I understand it can be a bit confusing if we have three scenarios, but if they are all bullish, it's actually not that confusing. It's just important to know what is the line in the sand that means, if broken, that the chart moves from one scenario to the next one. And these are the key levels traders can use. But for most people who are not trading every day, just sort of maybe larger swing trades, I think it's important to recognize that or realize that, yeah, we are still bullish, okay? And looking at the 4-hour chart, let's start with the bigger picture. I will rework this or work on this, and in one of the next videos, we can take a look at the long-term chart as well. But this is sort of still very much relevant. I did say that as we get closer to our $190 target, it will make sense to think about what will happen after this top. So the idea is still we have a wave 1, a wave 2, a wave 3, a wave 4, and possibly a wave 5. And this wave 5, is obviously, the idea is it's still unfolding, okay? So that's the idea, but what happens afterwards? There are ideas that there could be another 4-5 pattern, which would also mean a more substantial pullback, or it's a B wave top, so that makes it quite uncertain. However, I'm going to lean bullish as long as we are in a bullish market. So that's where the overall uptrend in the crypto market and bullish sentiment can support that larger bullish scenario. Nevertheless, after the next high, which should be targeting $190 plus in that area there, we most likely get a more substantial top. Again, that doesn't mean bearish, but it means we might see a more substantial pullback, sideways correction, for example. But I will work on that, and in one of the next videos, we're going to take a look at the long-term chart. At the moment, I think it's important to follow the structure here and to realize the next target on the larger time frame is $190 plus. How we get there, that's what we want to discuss in this video. The main thesis at the moment is obviously that this move to 190 has started. That would imply that the wave 4 bottomed here on the 23rd of January. I think it's a reasonable interpretation. It's plausible, but not confirmed. Okay, I'm assuming it at the moment. At the same time, I'm tracking the relevant support levels that tell me when I need to change that perspective. Now, that level that needs to break for me to change that perspective is $86.18. A sustained break basically below 86 suggests that the wave 4 is still in the making. This is, by the way, already the short-term bearish scenario. I actually wanted to work my way from most bullish to short-term bearish, but just wanted to start on the large time frame as well, because this is the main thesis. Wave 4 bottomed, and then obviously the most bearish case I have at the moment, at least, what we can see right now. I mean, anything is possible, right? The price could even go to new bear market lows, but is that likely at the moment? No, I'm not really showing you that. It's at the moment not likely. Can become likely, then we have to adjust. Not at the moment. So anyway, the main thesis is the wave 4 bottomed. I think that's the only reason why I wanted to show you this time frame. Let's go to the 1 hour time frame, and then we can take a look at different scenarios from most bullish to okay, bullish, but maybe short-term very bearish, or very, very short-term bearish, not very bearish, very short-term bearish, and then a little bit more bearish, but still bullish. Hope that makes sense. Okay, so let's start at the most bullish one. The most bullish interpretation I have is the yellow scenario. In this scenario, from the 23rd of January low, we've seen a wave 1 to the upside, a wave 2 pullback. And basically we're now in a third wave. That third wave unfolds as an A, B, C structure after the wave 1 unfolded as a W, X, Y structure. So it is likely that this is an ending diagonal in wave 5. In an ending diagonal, these subwaves are 3-wave corrective structures. We have 5 waves, yes, but we deal with ABC structures or WXY, so corrective structures, right? Which is why I'm labeling the top here on the 14th of February as an A wave in wave 3, the low as a B wave, and the top as a C, or the current move up as a potential C wave. I explained in one of the last updates that if we see a local top here in place at the moment in wave 1 of C, that I can add a support area for wave 2 of C. It's not possible yet because we haven't got a confirmed top. However, the invalidation point for this direct upside scenario is at $105.60. So it's this swing low from the 17th of February. In the yellow wave count, we should see a fairly direct move to the upside, maybe with only shallow pullbacks. The ideal target for the third wave is the first ideal target is the 1.38 extension. We talk here about $141. Minimum would be $135. Okay, what happens if we break below the invalidation point? Well, then there is still some structural support at $104 here, but below that level, we have a situation in which most likely a different overall assumption comes into play. It would go too far to discuss that in this video, but in short, we would be dealing with an A, B, C structure, and the B wave pullback could use the orange support range and the support levels between 101.55 and 86.18 would come into play. It would also be bullish, just would offer a deeper pullback before the next rally starts. But if then also the $86 level is broken to the downside, that would suggest an invalidation of our main thesis is coming, and the alternative on the 4-hour chart comes into play. Basically, wave 4 is still unfolding, and the C wave to the downside is unfolding, but that takes a break below 86.18, and the price action doesn't really suggest this scenario at the moment. So for me, it's mainly at the moment between yellow and orange, and I think orange has a good chance, yellow as well. They are both reasonable interpretations. The most relevant aspect here is now to understand, okay, what's the line in the sand distinguishing them from each other, and that's $105.50, $105.60 level, the invalidation point, right? Because if that level is broken, okay, we could still argue, yeah, maybe wave B is still unfolding then, right? But it would likely test the orange box anyway, so that kind of covers both. So just for more immediate upside, that last swing low needs to be holding. But overall, they are all bullish scenarios, and 190 is the next major milestone target on this chart. That's my update about Solana. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.